Bhaskar Bhat joins us. I'm going to change gears and talk about the consumer sentiment right now. Mr. Bhat, good morning. Thank you for joining us. Now, before I get into specifics of Titan, what is your understanding of the slowdown in the consumer space? Is the Indian customer gone out of the shop for a long time, or this is just cyclical and closer to Diwali, after the Dussehra, things will normalize?
Well, I can tell you two things. One is not all sectors have faced any this kind of impact. In our own case, it is jewelry, the gold price, which suddenly rose in the second half of June. It has had this effect, we believe. But if you were to take specific companies, they've had good performances even in the apparel sector, etc., during the quarter, including our own watch business and eyewear business. So I don't think this is the fundamental aspiration for Indians to improve the quality of their life is still holding out, and there is no slowdown in that. But there is a temporary effect. There are some stressed savings and so on. So people are holding back a little. So if I were to take our own business, it is jewelry which has had a impact in the second half of June. In fact, we were growing at a good clip up until then, and then the prices spiked, gold price. And what happens is when prices rise like that, the volatility is what consumers don't like, and therefore they wait and watch. And it was also the end of the wedding season, so there was no real occasion to go out and buy jewelry. And that should correct itself towards the second half of the second quarter. And we should have a good festive season. Overall, second half for the jewelry business for the second half of the year should be good. So sentiment-wise, I wouldn't say it is negative. It is certainly positive in some sectors, positive from some companies. So companies who have had a long-standing relationship with their customers do get back customers for themselves.
Good to hear that. Mr. Bhaskar, so then net result, you're confident of achieving this 20% jewelry growth guidance for FY20?
No. Let me tell you what we have lost. It is very difficult to get back. In the sense, Q1, the growth that didn't happen compared to that 20%. What we believe we should be doing, and we will be doing, and we'll be pursuing, is a combination of pursuing growth, which is second half, that number, which is growth of 20%, is what should come back. First half may not happen because already 4 months have gone by. However, the company is embarking on a combination of very aggressive growth, investing in growth, as well as working on cost control.
Can I say the new guidance for the full year could be 15%?
Well, it is difficult to state at this point in time because we are in the middle of this uncertain period. But the 20% of the second half for jewelry will hold.
Why are you confident that in the second half demand will come back? I'm just curious to understand because when
we have analyzed this current phenomenon, and there is nothing to believe that it is anything other than the volatility of gold prices, and therefore customers are staying away. Even at a high level, and this has happened twice in the past, 2007, 2013, when prices spiked and went up. After a while, the growths have come back because the fundamental demand for gold still hasn't got affected by any of these price hikes or customs duty hike as well, which has happened in the month of July. So this is based on past experience, and the fact that the first 5 days of almost 75 days of the quarter, the growth was at a fairly good clip. And in fact, South region, which is the most competitive, has grown handsomely for us. It is the West region where we've had problems, and to some extent in the North.
Okay, fair point. Let's talk about the watches segment then, Mr. Bhatt. And 20% growth in watches, would you say that this was a result of the promotional activity and the ad spends that you undertook?
No, I think we should break that into two parts.
Sure.
One is there was a specific order from TCS which partly got executed, so we should remove the effect of that. If you take that out, we are in the 12-13% growth, which is also healthy. And yes, there was a rescheduling of activations by some of our channel partners, and they have advanced it, and therefore there is that effect. Therefore July is not as good as what you saw April, June. But again, undercurrent on demand is reasonably healthy, and there we are not looking at very high double-digit growth, etc. The pace of growth, what we've been achieving in the last year and what we've talked about in the early part of the year is what we will get. And the margins are holding out, in fact, improving in that business. New product introductions, all that is contributing to the growth.
So, sans the TCS order, what kind of growth number do you think you'll be able to clock in for the watches segment for the entire year?
About 12%.
12%, okay.
If I look at auto companies, Mr. Bhatt, they are looking at resorting to production cut. They are not feeling confident of a demand pickup in the second half. So at a time when, in general, the sentiment is bad and consumer slowdown is bad, what extraordinary measures are you resorting to in order to control your cost or cut your expenditure?
Let me answer your question in two parts. One is the demand for auto and the sale for auto is also affected by a lot of other things, which is fundamentally the higher purchase, where money has dried up in the market, and because of all the stories you hear of agencies not being able to, consumers don't have finance, and this has been consumer finance companies have got affected, which is not the case for discretionary purchase products like us, both watches and jewelry. And in jewelry, you know that the Golden Harvest scheme is the most attractive for consumers to buy jewelry with. Therefore, what matters really is consumer sentiment for the category. We have not seen a change in that for jewelry in the first 75 days, as I told you, as well as in watches through the quarter. Yes, there is this effect of consumers wanting a deal to buy these products, which means a discount or something attractive. And once you launch that, so if innovative schemes to get consumers into the store, and because these are reasonably low ticket items compared to a car or house, and therefore we still believe. But cost control measures, there are several in any company. This is possible to take out costs which are wasteful expenditure. I'm not saying we waste a lot of money, but at any point in time you can renegotiate material costs, which is with your vendor partners, because the scale of this company is so growth is important, and once you grow you can negotiate better prices for raw materials, bought out items, including media costs can be brought down as you buy more and more. So there are opportunities in this company, and we will pursue those.
Okay, Mr. Bhatt, thank you so much for taking the time out and speaking with us today. Good to get in all that clarity, and always appreciate you chatting candidly about the business and the state of where things are as of now.